Folks, get ready because today we are diving into 3 stocks that are about to explode, and these are the stock to buy right now because they have the potential to make you rich if you catch them before the next major run. These are not random picks, not hype-driven plays, and not speculative names with nothing to back them. These are stocks supported by solid fundamentals, massive future potential, strong revenue performance, and firm backing from analysts and institutional investors. So if you're serious about making money in the stock market, make sure you watch until the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market, because opportunities like these are exactly what separate early profit takers from those who always feel like they missed out. The first stock on our list is Karman Holdings, Inc., trading under the ticker KRMN. Karman Holdings is an aerospace and defense company that focuses on providing mission-critical technologies across commercial space, defense systems, and aviation. The company plays a major role in advanced manufacturing, high-performance structures, and precision components that are used in rockets, satellites, and other high-demand aerospace programs. In a world where the space economy is projected to exceed $1 trillion within the next decade, companies with established contracts, industry expertise, and technological advantages are positioned to grow significantly. Karman Holdings is one of the companies powering the infrastructure behind this accelerating global shift. Karman Holdings has been reporting exceptional financial performance. In its most recent quarter, the company posted record revenue of $122 million, marking significant growth across all 3 of its major end markets. Even more impressive is the fact that the company delivered a record gross profit of $50 million, signaling improved operational efficiency and expanding margins. Adjusted EBITDA also hit a new quarterly record at $38 million, proving the company's profitability engine is accelerating. When investors see both revenue and EBITDA hitting all-time highs at the same time, that is a powerful signal of scaling efficiency and long-term financial momentum. But one of the biggest highlights that sets Karman apart is its funded backlog, which reached an all-time high of $758 million. A backlog this large provides 100% visibility to the midpoint of their full-year revenue guidance range, meaning the company has already secured business that will support its growth outlook. For investors, this reduces uncertainty and increases confidence in future performance. The company also completed a massive $1.2 billion non-dilutive secondary equity offering that attracted huge market demand. A non-dilutive offering means existing shareholders were not diluted, and yet the company was able to raise significant capital and strengthen its balance sheet. This is a major green flag because investors are essentially saying they believe in the company's growth trajectory enough to commit over $1 billion without dilution. The acquisition of 5-Axis Industries is another strategic win for Karman. This acquisition expands its capabilities with IP-rich content specifically targeted toward the booming commercial space industry. This positions Karman for long-term growth, especially as private space companies continue to scale, seek partnerships, and outsource advanced manufacturing needs. Karman's current stock price of $66.06 still leaves considerable upside when compared to the average Wall Street price target of $79.75. Analysts have issued targets ranging from $70 on the lower end to as high as $89, representing potential upside of about 22% from the current level. The second stock on our list is BlackSky Technology, Inc., ticker BKSY, a company that is rapidly becoming one of the most important players in real-time geospatial intelligence, satellite imagery, and AI-enhanced analytics. BlackSky analyzes data from its expanding constellation of satellites to deliver real-time insights to governments, defense agencies, commercial partners, and global organizations. Its Gen 3 satellite technology represents one of the most advanced, high-frequency Earth observation systems in the world. BlackSky has been experiencing explosive international demand, which CEO Brian O'Toole highlighted during the most recent quarterly update. The company secured more than $60 million in new contract awards, driven largely by global interest in its satellite imagery, predictive analytics, and sovereign intelligence solutions. This growing demand is outpacing near-term U.S. government business, which is significant because it shows the company is not overly dependent on any single market. Many nations are recognizing the superior capabilities of BlackSky's Gen 3 constellation and are accelerating acquisition cycles while expanding their intelligence budgets. With this strong international traction, Black Sky expects a powerful fourth quarter and plans to carry that momentum well into 2026. From a financial standpoint, the company reported quarterly revenue of $19.6 million and a massive backlog of $322.7 million, with an astonishing 91% of that backlog coming from international contracts. That level of diversification not only reduces risk, but also boosts long-term growth stability. Its balance sheet remains strong as well, with a cash position of $147.6 million as of September 30th, 2025, which gives the company ample flexibility to continue expanding its constellation and pursuing additional contracts. Black Sky's current stock price of $18.28 looks highly attractive when compared to analysts' 12-month average price target of $27. That represents a huge 47.62% upside potential, with some analysts projecting targets as high as $42. When Wall Street expects nearly 50% growth from a company with rapidly increasing demand, global defense tailwinds, and expanding commercial applications, that is not something investors should ignore. The last stock on our list is AST, SpaceMobile Inc., trading under ticker ASTS, a company working on one of the most ambitious and groundbreaking technologies in the world, the first global cellular broadband network in space that connects directly to everyday mobile phones. Unlike traditional satellite connectivity that requires dishes or specialized devices, AST, SpaceMobile aims to deliver 4G and 5G signals straight from orbit to your smartphone. This technology would allow people in remote areas, underdeveloped regions, oceans, deserts, mountains, or out-of-coverage zones to gain access to high-speed mobile data without the need for towers. AST SpaceMobile's financial results show a company that is aggressively investing in its long-term vision. The company reported revenue of $14.7 million, a major increase from the previous quarter's $2 million. Although earnings came in at minus 45 cents per share, missing estimates, this is expected for a company in heavy development mode. Operating expenses totaled $67.7 million on an adjusted basis as the company advances its satellites and overall technology infrastructure. Capital expenditures hit $259 million in Q3, reflecting the company's massive push to build and deploy its Blue Walker and Bluebird satellite constellations. AST is in a capital-intensive phase similar to what companies like SpaceX went through during early Starlink development. Despite the financial volatility, the long-term upside is enormous if the company executes on its vision of becoming the first direct-to-device global network. AST SpaceMobile currently trades at $74, and Wall Street analysts have set an average 12-month price target of $72.39, representing a slight downside of about 2%. Some analysts see far bigger opportunities, though, with price targets stretching as high as $95. The range between bullish and conservative targets shows there is debate around execution risk, capital needs, and timing for commercial rollout. However, the upside scenario is massive. If AST successfully launches enough satellites and scales partnerships with major carriers, its revenue potential could be in the billions. Telecom partners like AT&T, Vodafone, and others have already expressed interest in or partnered with the company. Millions of customers worldwide could become part of AST's network without changing their devices, making this one of the most disruptive tech opportunities in the market today. Long-term investors with high risk tolerance may view AST SpaceMobile as a moonshot opportunity that could generate exponential returns if the company succeeds. Well, that concludes our list of 3 explosive stocks that are backed by strong fundamentals, powerful financial momentum, and solid Wall Street support. These companies are positioned at the center of industries that are transforming rapidly. Aerospace, defense intelligence, and global connectivity in the next few months could be pivotal for early investors. Whether you're looking for reliable growth, high-potential international demand, or a moonshot innovation play, these stocks offer massive upside if the market conditions align. If you found value in this breakdown, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss an update on the hottest stocks that could make you serious money. Until next time, thanks for watching and stay tuned for more game-changing stock market opportunities.